This is the next video in the series from the Market Manifest, all these strategies and tactics that you can use to become a better investor, or you can understand to become a better investor. Nothing we say anywhere in this video is intended as personalized trading advice for you. If you want to get the Market Manifest, just swing over to peterleeds.com. It's available for you for free, and you don't even have to be a subscriber to the Peter Leeds newsletter to get a free copy of the Market Manifest and start reading it immediately. Media analysts are a commodity. The problem is not the analysts, it is the media. What I'm trying to say here is that whatever a network wants to say, like CNBC we'll use as an example, they want to talk about how such and such company is the new big thing, or this new cryptocurrency is the new big thing. No matter what, there's hundreds, thousands of people who have reasons why, yeah, that's what's going to happen. That's going to go higher in price. But there's also thousands saying it's going to go the other way and give reasons why it is going to decline in price. So the network will say, well, now we're going to have a bunch of guests on here talking about how great cryptocurrencies are, or how great this investment is, or this mutual fund, or such and such, whatever. They have a motivation. There's a reason why they're putting certain guests on. They could put somebody on the camera and display it to you who's saying, yes, buy Chevron. Or they could put somebody on the camera talking to you saying, no, do not buy Chevron. It's a choice at the point of the media. Who is going to be their guest? Who are they going to put on? It's a message that they decide they're going to give to their audience that'll be best for them to keep the viewers engaged, to hold people for longer so that you can have them see all the ads that they're going to put out. I owe a big part of my success to paper trading because I got blown out in about 14 days, less than 14 days, when I first got started trading stocks. I lost all my money, which was a few $1,000s. I was pretty proud of it at that age. I was 14 years old. In Siberian Pacific Resources, I bought 30,000 shares. It got halted. I lost 100% of my money. And that gave me the motivation to learn what I needed to learn, to do what I needed to do, to recover that money and make it back hundreds of times over. And now I'm showing you guys how to do some of this stuff too. But part of my success was that I had no money at all, and I had been washed out. The only thing I could do, I had no choice. I had to paper trade. I pretended that I had $100,000 on paper, blank piece of paper with a pen, and you keep track of $100,000 on paper, and you say, I'm going to buy this stock. I'm going to buy 5,000 in that stock, 20,000 in that stock. You write it down, and then you wait and see how you did. You would have made money or lost money. And that way you can refine your investing approach. You can see if you're pretty good at it or not. And unlike with most people, they have a few $100 to invest, maybe $1,000, $2,000 to invest. So they're not going to make a bunch of trades. So your learning curve gets stunted. If you have a pretend $100,000, you could buy dozens and dozens of stocks, buying in and out of them, buying and selling, keeping track of stuff, finding new investments. You're going to be really active. And the more you do that, the more you learn. And what did it cost you? Zero, just your time. It costs nothing. You risk not a single dime by paper trading. And if you think that you're a good investor, it doesn't hurt you to prove it on paper first. Because if you're wrong, you avoid losing that money. But you still get the gains of learning all the information that you learned. And if you're right, then great, congratulations. So you would have made some money you didn't make. So now go make it again. Stock market just keeps rolling. You can have opportunities all the time, every day. This video is inspired by the following testimonial. Thanks for your information you talked to us about. I'm waiting on you all the time to pop up on my phone. Thanks, Peter Leeds. You're the best. That's from Dexter Young. And one of the ways to know where the opportunities lie is with paper trading. And don't buy a program for it. Don't do a big advanced specific thing. Literally, a piece of paper and a pencil. Keep it on your desk and say, oh, I like that stock. I just heard of it while I was working. I'll write down, I'll buy 5,000 shares of it, or I'll buy $5,000 of it. And after a month, you can see how much money do you have in your account on paper. After 3 months, after a year, you can see all of that is knowledge, all of that is learning, and all combines to help your investing skills explode much higher. Company risk versus market risk, also known as systemic risk and non-systemic risk. The system in the systemic risk is the stock market, the network. So if there's 10 companies, and all 10 companies decline 5% one day, that's systemic risk. They'll decline together. The problem wasn't the individual companies. And if one individual company has a explosion at their factory or an event that happens, a really bad earnings results, Yeah, that is a company-specific risk. Try and understand the difference between it. And the best way to do this is if you have a company that they're in the base metal mining field and they drop 20% in value. The first thing you should be doing is looking at every other company in base metals mining and seeing what happened with their share prices at the same time. If they all declined equivalently or approximately equivalently, they're all dropping down a little bit over that same time frame, you do not have to be worried about a problem with the company that you're invested in for that company specifically. And often when companies as a group trade like that, trade in sympathy together, a lot of those trades reverse and they generally recover pretty well, more times than not. And you'll see another video on screen right now. It's going to take you to the next part of the limited 10-part video series about investing better and well using the tactics exposed through the market manifest.